Hi guys, welcome back to the channel. This video is about daily range, and I am going to show you how to identify a daily range in price action and also how to become profitable with daily range. So one of the ways to logically become profitable in trading is to buy at a discount price level and also sell at premium price level. But for you to be able to identify where is the premium and where is the discount, you have to know how to identify the daily range. So stay with me in this video as I take you in the journey of how to identify this daily range. Let me talk about these two words, the buy side liquidity and the sell side liquidity. Now, the buy side liquidity refers to a pool of buy orders, and the sell side liquidity is a pool of sell orders. Let me explain these orders. Now, when you see a swing high in form of this three candle pattern, that is, you have a candle that is high, and then a candle on the left and a candle on the right that are higher low, there we have a swing high. And when we talk about swing low, we have a three candle pattern with a candle that is lower than the two candles on the left and on the right. And whenever you see a swing high and a swing low, there we have a pool of liquidity. And this pool of liquidity could be a buy side liquidity or a sell side liquidity. Now let's look at this depicted diagram here. We see here price hit a level and then we see a bullish price. Now, those that bought this from this level to this level, those that bought have their stop loss at this level. We also have some traders that are waiting for price to break this level, have a retest, and then they will continue selling. We can see that there is a pool of what? Liquidity at this level, because we can see there are traders that are buying and there are traders that are waiting to what? To sell. So we see that there's a sell order at this level and there is stop loss at this level. There we have pool of liquidity. This becomes the sell side liquidity. Sell side liquidity. And for the buy side liquidity, we see there are traders who sold from this level to this level, and they have their stop loss here while they were selling. And there are traders that are waiting for price to come back, break this level high, and continue buying. So they have their orders also at this level. So this gives us a pool of buy side liquidity. So now, having this on your chart, you know that you have a buy side liquidity level and a sell side liquidity level. So what does this mean? This means that when you are to identify a daily range, you need to understand these two concepts, the buy side liquidity and the sell side liquidity. So let's talk about what is a daily range. A daily range is when a buy side liquidity is taken and so a sell side liquidity is taken. Now, this gives us a daily range because what do we see? A buy side liquidity has been taken and also a sell side liquidity has been taken. We need to see that price also created some level of bullishness when we have this price going bearish. And what does this mean? We need to see price creating a swing point at this level. Put our Fibonacci level and see how does that become a daily range. So when you put your Fibonacci from this high to this low, what do you see? We have a daily range from this high to this low, and the 50% of it is the equilibrium. We have the premium level from this high to this level, and also the discount level from this low to the 50%. So anything below 50% is a discount level, and anything above 50% is the premium level. So what do? We buy at discount and we sell at premium. Now, using this depicted diagram, if price is to be at this level and we want to enter a trade, I think is better for us to look for buys, in price buying, than we should sell. Why? Because price is not at premium level for us to sell. It is at discount level and it is right for us to buy. So let's go to the chart and see how to identify this dealing range. Let's look at this price action. What do we see? We see that price is bearish. Price is bearish. But we don't just sell because price is bearish. We need to identify the dealing range. And how can we do this? Now, like I said in the beginning, that we need to take out what? Buy side liquidity and sell side liquidity to know if price is at a dealing range. So here we see price sweep the liquidity above this high. What do we see? We see price sweeping liquidity above this high. Now, this gives us a what? A sweep of liquidity. And this is what? Buy side liquidity. Now, what are we going to identify next is to identify a what? A sell side liquidity taken to have a dealing range. Now look at this. We see here that price has taken out this sell side liquidity. And here comes the what? Here comes sell side liquidity taken. So we see sell side liquidity taken. So we have a dealing range from where? From this high to this low, we have a dealing range. Now, let me explain. Now, because this low here has not created a significant, a significant pullback for us to consider it as a dealing range. Moreover, we did not see any sweep of liquidity at this level, a buy side liquidity. When this low created, we did not see any sweep of liquidity. Had it been there is a sweep of liquidity, we would say that another range has been created. But this swing low is not enough to create a daily range. So our daily range is from this high to this low. Now, if we place our Fibonacci price tool, and then we have from this high to this low, what do we see? We see price creating what? A daily range from this high to this low. And the 50% is the equilibrium. And we can see price move from the what? From level of what? Discount to level of premium. And we see price is above 50% at this level. So now we have identified one daily range, that is bearish price daily range. So for example, here, after this price created this retracement into the premium level, we see another daily range being formed. Why? Because we see a buy side liquidity has been taken and also a sell side liquidity has been taken. And we see another what? Daily range being formed. And we have from this high to this low, we see that we have another what? Daily range. So, but what happened here? After price sold, we see price created another daily range. How is it another daily range? We see price take out this low, which is sell side liquidity, and then another buy side liquidity. Then we have a what? A bullish daily range because we see a break of structure. Price has closed above this high. Now we have a new daily range, which is from this low to this high. We see price creating another daily range. And what do we have? We have price did not come into the what? The discount level because price did not go below 50%. So far, we will miss this trade. But what do we see here again? We have another dealing range. How? We see price taking out this sell side liquidity and also a buy side liquidity, and we see price what? Price went bullish. And then we see a level of what? A level of retracement. So we have, when we put our Fibonacci from this low to this high, we have another what? Dealing range. But now price did not come into the 50%. Now price continue what? Bullish. Now I want you to look at this. When price did not come into the 50%, you don't consider this as the dealing range. Now, you have to consider the new high that prices make. And if you create this high, if you take your price level to this high, you see that price came back into the 62% retracement level of the daily range. And right from there, we see price continue going bullish. So guys, this is how to identify a daily range. If you have any question, use the comment section to ask the question. And if you find this video helpful, kindly share it to the people that it will help. Bye.